Hi, I'm Segun Lawson, CEO and President of Thor Explorations. Thor is a West Africa-focused gold producer, producing gold from our 100% owned Segilola gold mine in Nigeria. We are in our fourth calendar year of production. We are looking to produce about between 90 and 95,000 ounces of gold this year. That enables us to fund internally our exploration activities across West Africa, where we are in Senegal and Côte d'Ivoire. In Senegal, we're advancing the Douta project to a preliminary feasibility study, which is a matter of weeks away. And in Côte d'Ivoire, we're advancing two very exciting exploration projects where we've had successful initial drill results. We are also in a very healthy financial position, given our low costs of below $1,000 per ounce and the prevailing high gold prices. That's enabled us to return dividends back to our shareholders on a quarterly basis. Where our value is underpinned by a very strong cash flow and profitability. However, we do think we continue to be a growth company with a very strong organic pipeline, diversified by stage of development and jurisdiction.
Segun, good to have you here. Well, it's your backyard, isn't it, really? You live nearby. Great, as you said, great year for gold and gold companies who are producing, and you're producing with a very low AISC, below $1,000, making a lot of money. I want to sort of try and understand what you're going to do with that, because you've got this portfolio approach, as you say. Before we do, let's talk about the quarterly results, because it really gives the top line numbers, and we'll kind of get into it.
Yeah, look, it was a very strong quarter for us. Q3 is normally our most difficult quarter, given the rainy season and the hard conditions. But we produced 22,600 ounces of gold in the quarter, of which we sold 19,600 or so, just over $3,500 per ounce, which meant our revenue was about $70 million for the quarter. So, it's a very, very strong financial performance. The 3,000 ounces we didn't sell, we held on to Q4, and obviously the gold price has gone up above 4,000 in the fourth quarter. We've sold those ounces above 4,000. So we're very well positioned for probably a record-breaking quarter financially in Q4, should we continue to hit our targets.
Right, money talks. It gives you optionality. And with this portfolio, I want to kind of get into each of those. Okay, Segilola, people look at that and go, well, look, great, producing, it's high grade, but you've got to extend that life of mine. You've got the money to do it, so how are you getting after it?
Yeah, that's our top priority as a company. We fully repaid our debt. Our balance sheet is growing month to month, and we know that every additional ounce we find now is hugely value accretive. Almost what I've referred to previously as a super ounce. We've sunk all our capex. We have a workforce there. We understand the geology. So we've been able to step up the rate at which we explore this year. We've purchased our own rigs. As I speak now, we have 5 rigs drilling underneath the pit, and we are drilling to success. We continue to intersect wide, high-grade mineralization, mineable mineralization underneath the pit. So that's been stepped up. We've set ourselves an internal target to release an updated resource in Q1 to the market, and then that would just be a platform from which to grow at. It won't be a complete line in the sand. So we aim to continue to build this resource underneath the pit. Probably worth noting as well that when we did the bankable feasibility study, gold was at $1,600 per ounce. At the beginning of the year, gold was at $2,600 per ounce. So the pit design can be optimized certainly at $4,000 and taken deeper in the south where we are to try and recover additional ounces before we transition into that underground. So we do think there's a lot of significant upside in extending the mine of life. We're working very hard towards it. We're hitting successful milestones, and we hope over the course of the next year we are able to demonstrate a material increase in that.
Right. Obviously, as you say, it'll be a sort of marker in the sand, but there will be more coming. What's the grades look like, and what do you sort of now, again, with this price, what do you think the kind of cutoff will look like?
Yeah, so the grade at the moment is averaging around about 5.5 grams per ton, which is
a little bit more.
Yeah, a bit more than the open pit. The open pit is just over 4 grams per ton. But I think the constraint underground will be the tonnage, how much we can pass through. So that's why we're working on different areas of the mineralization. We're looking at a shallow dipping plunge in the south and a steeply dipping shoot in the north. And hopefully we'll be able to mine from both of them at the same time to increase our tonnage.
Right, what's that going to do to cost though? Because obviously you're quite proud of being under $1,000, as you should be, but it'll bump that up a bit, right?
It will bump up the cost. Naturally, underground mining is more expensive than open pit, but at today's gold price, even at a $3,000 gold price, there's a very healthy margin in between the underground and where we are in terms of gold price.
For sure. Now, if I look at that, that's great. We're going to maybe increase the resource and potential reserve there, and you'll come back in Q1 and give us an idea of what's going on there. But in terms of Segilola and extending that mine life, there's more ways that you can do it than obviously just that pit and the underground. What else are you looking at in country?
We're looking regionally, so we've given ourselves a 50-kilometer radius from the plant, and we've been exploring there. Now we've upped our exploration budget, again using our rigs, which has enabled us to move quickly and more flexibly as well. We've succeeded in drilling out a number of satellite deposits. These are much smaller, nothing of the scale of Segilola yet. Hopefully we will continue to find more. But we're aggregating, a massive satellite deposits that can be mined and stockpiled at the plant. We're carrying out a pilot case on one of our targets to the south, and we're doing that next year. We've gone through the permitting process, through the land acquisition process. We're doing the mine design, and the plan is next year to mine that and stockpile it by the plant. That's a very small high-grade deposit, about 5 grams per ton, which we will stockpile alongside our existing stockpile, which is currently over 44,000 ounces, grading at 0.85 grams per ton. So if you think of today's gold price of $4,200 per ounce, there's over $175 million worth of gold already just sitting in our stockpile to be processed after the mine life.
And in terms of kind of the modularity of the operations, would you look at some future point to sort of make it a little bit bigger? And because you can only optimize to a certain point, right? And then it's diminishing returns. So if you do find more gold under there, can you increase production?
We can, but I don't think it's something we would do just yet. We're very, very fortunate to have this high-grade ore body. And what we see around us is really constrained by the size. We haven't found anything of scale of Segilola yet. So I think, right now we're processing around about 1 million tons per annum. I think that's anything we find would feed into that well. I don't think, we'll be looking at, the sizes we see elsewhere in West Africa where we have 3-4 million ton per annum plants, albeit a much lower grade being fed into the fact that we've got such high grade.
It's optimized for now.
Yeah,
it's the right size for now.
Exactly.
Okay, so we pop along the coastline a little bit, and obviously people are waiting for this PFS, because that is a meaningful change, potentially a meaningful change in terms of understanding the economics of potential for the company. So where are we?
So I think first thing to say about the PFS is that it's the first opportunity to attach economics to our project in Senegal, the Douta project. I think the PFS work we've been working very hard at it for a while now. We pushed it back in Q2 to the end of the year, where, in fact, as of this morning, I've had a proofread where we're finalizing certain sections and optimizing it. What I can say is that it's the project economics are certainly material to the value of the company. And it's a very detailed PFS using real quotes with our real contractors. So it's not an academic study. It's something we've worked alongside our EPC contractor and mining contractor with over the last 18 months, designing the flow sheet, the mine design, the scheduling, all the unit costs. And we think from this PFS, we would have enough confidence early next year to start making orders on our long lead items prior to final investment decision. That's how confident we are with the quotes. The PFS is a matter of weeks away. We're looking to fast track from a PFS to an investment decision. We know what the costings are going to look like. We think we can build this mine fully without any equity dilution. And we aim to have a mine life, around about that 10-year mark. It's a much bigger resource, albeit at a lower grade than Nigeria. It's a much bigger resource than we have in Nigeria.
It's interesting, when real companies do economic studies, they use real numbers. I've been analysing a company that's been benchmarking on their PFS. I find that quite extraordinary to go through that. But so, okay. So give us a sense of timing of that one, and I guess more importantly, get a sense of this kind of the size and scale of the capex and the economics that the project may bring you. Where does that sit in comparison to Segilola?
Yeah. So in terms of timing, like I say, literally massive weeks away, but obviously the holiday period coming up.
Production, I'm going for.
Oh, to production.
Yeah.
I thought you meant to the PFS.
Yeah. I was listening.
Okay.
Yeah.
Okay. The first part. Okay, timing to production. Look, we have the PFS. We want to be making an investment decision in the first half of next year.
Right.
We're going to be ordering the long lead items in Q1 or end of Q1, beginning of Q2 next year. Yeah. And we see ourselves aggressively advancing this, looking to pour our first gold in Q1 2028. So,
wow.
Yeah, so it's an aggressive timeline. We believe we can do it. The permitting process has been going on for about a year. We expect to be fully permitted by the end of June next year. Right. Our EIA has been approved and validated, and there are going to be a few optimizations. Now, in terms of how much is the project going to cost, it's going to be between $250 and $300 million. Right. Yeah, and of which we would pay $150 million from our own balance sheet.
So that'd be the equity, so you'd be getting debt for the rest.
Yeah, so the remaining $100 million we'll try and get from one of our lenders. We have a very good relationship with AFC.
Yeah.
Well, AFC is a shareholder of ours and did the financing for our project in Nigeria. Yeah. So obviously they would be the first point of call.
And let's talk about the timeline then. Because it sounds relatively simple, is what you're suggesting, given the timeline to build.
Oh, nothing simple in this in
this
game.
Okay.
But in terms of timeline, I can just show you the clear difference from now compared to where we were in Nigeria. When we were in Nigeria, we had to tick all the boxes, get the financing. Even from signing the financing deal to our first drawdown was 14 months. Yeah. Here, whilst we're getting our finances in place, we have the ability, because we have cash flow from Nigeria, we have the ability to pay for long lead items, the mills. We have the ability to start doing earthworks. We have the ability to move so much along prior to closing the financing. So that's what we're going to do. We're going to, do the first part, from our balance sheet, whilst closing the remaining $100 million that we need. Yeah. And we have a lot more optionality in terms of the remaining financing. We have, obviously the AFC, we have project finance. We're generating cash. We can do corporate loan or revolving, some kind of revolving facility. So we have a lot more optionality. We expect it to be cheaper than what it was when we financed in Nigeria. Yeah. And so. But
that was a factor of different times, right? Different market. You've not done it before.
No track record. Yourself. No gold mine in Nigeria at the time as well. This was the first one, so it really took a.
That's true. It was the first gold mine,
and it still is. Yeah. So it really took a very supportive and visionary, should I say, lender to sit alongside us and understand where we were going with it. Yeah.
Wow.
Not even fully repaid, so
and less stressful.
Yes. Yeah.
Less to prove. Yeah. No, that's fantastic on that front. And then, of course, we just finished off with the portfolio before we can move on to other things. Is obviously we've got a much earlier stage, but prospective, I think, is that the right word? Projects
in Côte d'Ivoire.
In Côte d'Ivoire, where one no drills yet, and the other one just started out on its journey.
Yeah. So I'll start with the one we've drilled, Guitry. Yeah. We acquired that from Endeavour last year. Yeah. And they had drilled, but only drilled in the oxide and the laterite and had no bedrock mineralization. Yeah. But we took a look at it, and our geos believed that there was something there. There's a massive geochem footprint, 8 kilometers by 5 kilometers, and where's the source of this gold? And having reinterpreted it, they reoriented and redesigned the drill program, and we drilled 4,600 meters earlier this year. And I would deem it a very successful drilling campaign. We had a couple of news releases with our results. And we delineated about 6 mineralized lenses, parallel lenses, which remain open along strike and at depth. High grade, some 10 meters wide at 10 grams per ton, 10 meters at 9, 2 meters at 16. So we're very encouraged. I would deem that a discovery. But I think that our biggest takeaway was that this area we drilled is probably about 15% of the geochem footprint. Right. And now we've designed drill programs on 2 other areas of the footprint. Right. Now we're actually drilling as we speak now. Okay. So if we first of all, if we extend what we've drilled, that's going to be significant upside. And then if we replicate what we've drilled on the other parts of the footprint, we're onto something, pretty significant. We were aiming for a maiden resource by the end of the year, but there was an extended rainy season and presidential elections in Côte d'Ivoire, which meant nothing happened for almost 2 months. But we're excited to be back drilling now, and we have a runway of 8 months of dry season ahead of us to drill. So we're still working towards our maiden resource. It will be in the first half of next year. I'm not exactly sure when.
Okay, it's exciting. So what we're seeing is a big, long production line of revenue. One, obviously boosting what's coming out of Segilola. But two, just these kind of near-term projects. Obviously, Senegal, fantastic, and Côte d'Ivoire. It's a little bit further down the line, but it's all coming through. When I look at sort of the M&A activity, I saw something out from Perseus this morning. I think we're seeing Endeavour next week, where it's quite clear those with money are tempted to maybe use this as an buying opportunity to pick up other things. Your portfolio is big enough for you for now, or is it?
We didn't even speak about the final project in the portfolio, which is in Côte d'Ivoire, Marawi, and that's not drilled yet, but the initial exploration results there are hugely encouraging.
Right.
We've delineated 8 kilometers of drill targets on 2 structures in Birimian greenstone with super high grades up to 30 grams per ton. 10 grams, 17 grams per ton along the entire strike length of these drilling targets. And these results are from in situ bedrock, rock chips that were taken. So obviously it all looks super exciting prior to drilling, but we're super excited to be drilling this. And again, we've just kicked off drilling there, and we don't intend to stop drilling till the rainy season, till July. This is all internally funded exploration. So we have drilling going across all our projects in all 3 jurisdictions. And like you say, we're diversified not only by jurisdiction, by stage of development, which has given us this pipeline to production.
Not tempted to go crazy.
Yeah, exactly. So when we look at inorganic opportunities, then it has to be extremely compelling to leapfrog what we have.
It's very expensive out there.
Yeah, it's expensive, and I think we've got great projects internally. So to leapfrog what we have internally, in terms of use of cash, it has to be super compelling. And we keep looking, and we just haven't seen anything that's as exciting as what we have.
You don't need to. Good man, Segun. Well done this year.
Thank you.
Next year sounds hot and heavy as well.
It's another potentially transitional year for us next year. More production, hopefully stabilized gold prices where they are, mine life extension, going into construction, and 2 maiden resources in Côte d'Ivoire.